Welcome to another stage analysis video. It's Sunday the 15th of September 2024. Got a lot to get through as always on the weekend video, but going to start off with a look through some of the weekend watch list stocks, starting with RBLX here. So it's one that had a recent stage 2 breakout attempt, but there is a broader context to this, as while it's attempting to move out to new highs in the short term, breaking above some multi-month basing area here. If you actually spread out to the longer term time frame, you can see it's been basing in a much broader pattern for the last few years now, since it IPO'd back in, I think it was 2021, around 64 and a half kind of area, I think it was. So it did have a stage 4 decline before making a selling climax, and then it actually formed what we call a complex selling climax as the initial rally didn't make it back above the 10-week moving average there. It wasn't yet a change of behaviour. So this whole area here is what we got, a more complex selling climax, short mag rally, secondary test area. So in theory, this is the start of the initial base structure, which if we take it across all the way, you can see we're still within this broader context, but within that we can see we've had these multiple pivot highs around the same sort of level. So come through here, all of these levels, and then draw a broader area across here. You can see we're still below this major level of resistance that's been tested 7 times in the last 2 years. So in order to clearly move into stage 2, this really needs to move above that level there. So at the moment, as I said, while technically in stage 2, it's your stage 2 breakout week here and making a continuation attempt, it is still underneath the resistance from these 7 pivot highs from back in the last 2 years here within the broader base structure. So you can see from a sub-industry perspective, only 27% of the stocks in the interactive home entertainment group are technically healthy. So if we open up the group here, you can see it's a relatively small group. So RBLX being the strongest stock in the group at the moment, followed by C. So there's only 4 stocks in that group that are in the technically healthy category at the moment. So 6 and above is what we consider technically healthy, 5 and 4 are neutral, and 3 and below are weak. So at the moment it's leaning more towards, there's 2 times as many in the weak as there are strong currently. And if we look at the industry, there's only 30% as well, so the entertainment industry, so a broader industry. As you can see, if we go into the actual page for that, you can see at the moment it would need to start clearing above this 40% level or so of technically healthy stocks to be a change of character. So at the moment it's sitting around the 30% level, and mid 40s on the percentage of stocks above their 30-week moving average. So overall there's more weak stocks than there are strong stocks at the moment in the entertainment industry or industry group here, and RBLX being the strongest currently. So in the communications services sector overall, it's the 4th strongest stock at the moment. We move on to Netflix here. You can see been running in stage 2 for a while now. So its initial stage 2 breakout was with a still declining 30-week moving average all the way back here in the latter part of 2022. So once that started to turn up, it moved back into stage 2 more effectively there, as we tend to avoid stocks when they still have a declining 30-week moving average. You can see crossed above the zero line. When was it? The latter part of 2022 there, and hasn't really looked back. Had a brief shakeout move through here, started to break down through some local pivots, so had a brief stage 4 breakdown attempt, but with a still rising 30-week moving average. So with the same regard to that, we tend to avoid shorting stocks when they've still got a rising 30-week moving average, as what happened with this one often can happen. We get a spring type action, big reversal bar, turns itself back around again and makes a stage 2 continuation. So although it's not technically been in stage 2 for the entire time since back in 2022 there, it did have a brief break into stage 3, stage 4, but for the majority of the time it's been in a strong stage 2 advance, and the recent moves here has put it potentially into stage 3, but sitting right at the top of the range. So if we come back to the daily charts here, can see sitting just above its 50-day moving average and 21-day moving average at the moment. So we zoom in on this a little bit more, the 180R level here. So you've got your free ATR band, so -3 to 1 below there, and then +1, 2 and 3. So at the moment sitting right at the +180R level. So when we're above the +180R level in the short term, that's what we consider a short-term uptrend. So at the moment sitting right on the borderline of that, but within this broader structure at the moment. So looking for a continuation breakout to new highs. If it does fail here, turn it into an up thrust. If it starts to get back through that 50-day moving average, then that would be of concern. So another one that we're looking at the moment is Meta. So starting to get back to the top of the structure that it's been in since all the way back in February. This was an earnings move, so it's been going sideways for the vast majority of this year. So you had the shakeout at the end of April there before coming back into the range. We've had a few other dips below the range and up thrusts at the top of the range. So at the moment sitting right on the borderline of the structure. It starts to clear above that sort of 540, 545 area. Get that up a little bit more specifically. So we've got 542.81, so 543 starts to get above there, then obviously potential for further stage 2 continuation. So where are we? Meta. So as you can see on the stage analysis technical attributes chart here, its SATA score at the moment is what we consider strong. So it's on a 7, so it's moved from a neutral score back to a strong score in its sub-industry. It's a bit further down in the group, so where are we? 36th, 9th in the group currently. It's above the Mansell relative strength 0 line since all the way back in early 2023 now, so it has pulled back into that more tightly recently. So, and in the communication services group overall, it's a fair way down, but still in the strong range. So again, looking for a stage 2 continuation breakout attempt on this one to new highs, but within the structure that it's in, if it does start to break below this 30-week moving average here and then start to break some pivots, then potential for obviously a stage 4 breakdown at that point. But at the moment, looking for further continuation.